UnitedHealth Stock has lost nearly half its value in a year, is facing government cuts, cyber attacks, and federal investigations. Yet some of the world's smartest investors are rushing to buy it. UnitedHealth Group is one of the largest healthcare companies in the United States. Investors follow this stock closely because it is tied to Medicare, Medicaid, private insurance, and the fast-growing Optum business that handles health data and pharmacy services. Lately, the company has been in the spotlight for both good and bad reasons. In this video, I will explain why I think UnitedHealth could be setting up for a major rebound and how you, as an investor, should proceed. The first thing to notice is that the short-term chart looks strong. On daily charts, most technical indicators show positive signals. This means the stock has been moving higher over the past few weeks and is showing signs of momentum. When traders look at moving averages, which smooth out price action, they see the stock trading above its 10-day, 20-day, and 50-day averages. This is important because it shows that the short-term trend is positive. A stock that stays above its short-term averages usually finds buying support from traders who are watching the same levels. For UnitedHealth, being above those averages suggests the near-term price direction is still up. On longer-term charts, the stock is still below its 100-day and 200-day moving averages. Right now, UnitedHealth is well below its 200-day average, which means the long-term trend is still negative. This gap between short-term strength and long-term weakness shows that the stock is in a recovery phase but has a lot of work to do before it can truly turn the corner. Momentum indicators also give mixed signals. The relative strength index sits in the low 60s, which means the stock is not overbought but has been climbing. If the RSI moves above 70, that often signals the stock may be due for a pullback. For now, the RSI suggests there is still room for the stock to move higher before hitting resistance. The MACD, another momentum tool, is close to neutral but leaning slightly positive. This confirms that while the stock is improving, the strength is not yet overwhelming. In other words, traders are interested but not all in. The area around $280 to $290 has acted as support in recent weeks. Resistance is the opposite. It's where sellers step in and stop the stock from rising. Resistance is forming around $320 to $330. If UnitedHealth can break through that zone, it could open the door for a larger rally. Until then, the stock may bounce between support and resistance. While the chart is one part of the story, the latest news is another key factor. UnitedHealth has been under pressure this year because of rising costs and political risks. President Trump's administration recently passed the One Big Beautiful Bill Act, which cuts more than $1 trillion from Medicaid funding over the next several years. This is a big deal for UnitedHealth because about 40% of its revenue comes from Medicare and Medicaid programs. Investors worry that less government spending will hurt UnitedHealth's profits. However, I do believe this is a temporary issue because the US population is both growing and aging. By 2040, more than 20% of Americans will be over the age of 65. Since older people usually need more medical care, demand for UnitedHealth services should increase over the long run. Another issue came from a cyber attack earlier this year. UnitedHealth's Optum Change healthcare unit was hacked, which disrupted billing and claims processing for hospitals and doctors nationwide. This created major headaches in the healthcare system and raised questions about how well UnitedHealth manages its data. The Justice Department has also opened an investigation into UnitedHealth, looking at whether its Medicare billing practices have been appropriate. Despite these challenges, some big investors remain optimistic. Warren Buffett's Berkshire Hathaway disclosed a multi-billion-dollar investment in UnitedHealth this summer. After Berkshire's purchase was announced, UnitedHealth stock jumped by more than 10% in just a few days. This shows that large, long-term investors still believe in the company's future. It also matches what many Wall Street analysts are saying, that the stock is undervalued today compared to its history and compared to its potential earnings in a couple of years. Valuation numbers support this view. UnitedHealth's price-to-earnings ratio is much lower than its 5-year average, meaning the stock is cheap relative to how much profit it is expected to generate. I believe earnings will recover quickly after 2025 as cost pressures ease. If that happens, and if the stock returns to its historical average valuation, price targets range from $380 to over $400 per share. From its current level of around $300, that would mean an upside of more than 25%. This gap between the current price and the potential target is one reason I see an opportunity here. However, we also need to watch for risks. The stock has already rebounded strongly from lows near $250 earlier this year. That means some short-term traders may want to take profits, which could create selling pressure around the $300 level. If the stock falls back below support at $280, it could signal another leg down. If further cuts are made to Medicare or Medicaid budgets, or if the Justice Department probe finds wrongdoing, it could weigh on the stock for a longer period. Putting it all together, the chart of UnitedHealth shows that the stock is in a short-term uptrend but still facing long-term uncertainty. Buyers are returning, momentum is improving, and big investors like Warren Buffett are placing bets on a recovery. At the same time, resistance levels and long-term averages show that the path back to previous highs will not be quick or easy. I believe that technical analysis works best when combined with real-world context. A chart may say buy, but news about government funding cuts or legal probes can change the story fast. For UnitedHealth, the chart looks encouraging today, but the stock's future will depend on how well the company handles political pressure, security issues, and rising costs. If problems drag on, resistance levels may prove hard to break. If you enjoyed my analysis of UnitedHealth, make sure to subscribe and check out my other stock-related videos. Until next time, goodbye.